Okay, good afternoon, everyone. So, welcome to today's session. We're going to look or continue with income in the session, which is part of Learning Unit 4, which focuses on the gross income and the exempt income. So, we're going to do two more exercises in this session, and then in our following session, we're going to then focus on the expenditure specifically. Now, if I looked at the past papers, the way they actually ask a lot of the questions, they have a combination of a calculation and then they've got a combination of where you have to do the theory and give the case law. So one of the questions we're looking at today is again more theory based with the case law and a little bit of application, just to make sure that you guys are comfortable with doing it that way. Okay, so the learning objectives specifically for this learning unit, let's just quickly look at what do you need to be able to do once you are finished with this. So it talks about the criteria contained in the definition of the gross income. So those are the 5 components we talked about, and then the applicable case law. So those are the main things you would use when you get a theory type question to discuss if something is included in gross income or not. Then you need to apply the principles of the relevant case law to illustrate the meaning in terms of gross income. So those first two go together. Then be able to identify the specific inclusions. Now they've limited the ones that you need to be aware of as the services rendered or voluntary awards, lease payments, no-hour payments, lease improvements, similar assets, similar to trading stock, dividends, government grants, Keyman insurance policies, recruitments, and other inclusions. So these specific inclusions are generally related more to your companies as opposed to individuals. Some of them would still link to an individual, for example, the services rendered, dividends, potentially the Keyman insurance policy, and the recoupments. Then you need to be able to calculate the amounts based on the information. And then you have to identify entities which are exempt. Now, generally, entities that are exempt is more your government sphere entities would be exempt from tax because they use tax money to ultimately pay their expenses. And then you need to be able to identify income that is exempt. So they talk about local dividends. Now, normally local dividends are completely exempt. There are the 4 exceptions though. The most common ones is the rates one, and if you have more than 10% of the shareholding in a company, then it would not be exempt. And then your foreign dividends is generally that ratio, so you need to know the ratio. So you take the foreign dividends component, apply the ratio to work out the exempt portion of it. And then government grants are generally exempt as well. Now let's quickly recap gross income definitions. So the first thing you need to look at is whether it's a resident or non-resident, because of the fact that the source that you will be taxed on will differ. Now for residents, we said it's based on worldwide income, whereas non-residents is only based on a South African source, so amounts that was received by or accrued to. So when you do the discussions, the first step is generally to identify if it's a resident or non-resident. Then you have to look at whether the total amount, was it received in cash or otherwise, and it can be received by, so physically received it, or accrued to. So I've already provided the goods or service and I'm actually entitled to that money, or it's in favor of such a resident. So that's, for example, where a third party collects money on your behalf. As soon as they've collected it on your behalf, then it's in favor of you and you will also be taxed on it. And then important is to exclude any accruals or receipts of a capital nature. Now the specific inclusions is your services rendered. Now that excludes fringe benefits. We discussed in class a fringe benefit is basically linked with employment. It is goods that you would receive from your employer because of the fact that you are employed with them. For example, the use of a motor car, a computer, a cell phone. Those would be fringe benefits. Now for Your purposes, you do not need to know how to do the calculations. I've just included it there for additional information. Then you've got your restraint in trades is included as a specific inclusion, and it is over the longer of 3-year period or the contract that was concluded. So if the restraint of trade contract is for 2 years, you'll actually apply a 3-year period, whereas if it's longer, you would apply the longer period. Lump sum benefits, now that can be based on employment, it can be from insurance, whatever the case may be. Those would also be specifically included. Contract of employment, so any amounts due to employment would be included. Then your lease premiums that you receive from your tenant, as well as any leasehold improvements that they do. Now, the leasehold improvements are generally over the period of the lease contract that you would include it. And then you've got your know-how payments that is based on intellectual property, the payment that you receive for using it. Then other things is the sales of assets similar to trading stock. So it is something that you do not classify as trading stock, but it is seen as similar because of the amount of how often you sell it. Then you've got your dividends, your government grants, any sporting income, then your key man insurance policies. Any income from that would be included in your gross income as well. And then recoupments, the ones that you specifically need to be aware of, is section 84A, and we're going to do an example today. Okay, now before we just move on, admin asked me, just going to open a poll here. So admin asked me who will be physically attending the test prep session on the 14th of October. Now, the reason for that is there is limited, or they're only allowed to maximum amount of students that can go into a class is 50 students. So I just need to make sure whether we should split the group in two or if there will be an issue around that. I will also record the session because I know some of the students potentially might be writing or will not be in the area. So I will do a collab consecutively with that. So I just need to make sure that what type of venue we need to book. Estian, the details of the session will be communicated once are finalized. So it will be on the 14th. I just need to get confirmation on the venue, but that is based on how many students will attend, whether we do it 1 or 2 sessions and split the groups, because they can only accommodate 50 students maximum in the biggest venue they have. So that's the reason I'm just asking this. Okay, thank you guys. Okay, so let's quickly discuss or just remind you how to do a recruitment. Now, this they love to ask in the test because it is generally about 3 or 4 marks that we apply by testing one simple concept. Now, what you need to remember is for recoupments, we are essentially comparing the proceeds, so whatever we sell that asset for, to what the tax value is at that specific date. Now, recoupments is what you include in the gross income. And then we would also do for those capital assets, we would generally include it in capital gains tax. But if you've already included the recoupment amount, generally the proceeds and the base cost would be the same in most instances. But for now, you just need to know the recruitments for your test. Okay, so we won't have covered capital gains in class before you write test 2. Okay, so the first thing you need to do is you have to work out what is the tax value of the asset sold. Now, the tax value is basically the carrying amount of that asset. So we take the cost price of what you initially paid for it, and then any additional costs that you incurred to get that asset into the location or condition that it is required for your business. Then you would deduct any Section 11E or Section 12E or Section 12C wear and tear deductions that you were allowed to claim. Okay, so that is basically the depreciation charge that SARS allows you to deduct when you do your taxable income. Then you remove that out of the cost price to work out what is your tax value. Now, when we work out the recoupment, you take the lower of the selling price and the cost price. Now, why I say the lower of the two? If the selling price is actually more than the cost price, this calculation, we cap the amount to the cost price. You cannot recoup more than what you were allowed to deduct for wear and tear. Now, your wear and tear is based on your cost price, so I would never have been allowed to deduct more than what that asset initially cost me. So that's why I've changed it to the lower of selling price and cost price, so that you guys use the correct amount and don't forget about the capping. So then you take whichever is the lower of those two and you compare it to the tax value. Now, if the selling price is more than the tax value, then you have a recoupment. If the opposite is present, so if the selling price is less than the tax value, then we will get a additional scrapping allowance, which would be one of the expenses we will discuss in the next session. Okay, so recoupment is generally when I've made a small profit on that asset. Now, what it basically means is we are recovering a portion of the wear and tear that we were allowed to deduct for tax purposes through the sale of this asset. So what SARS says is, okay, I've allowed you to get that wear and tear initially, but now I'm going to recover the portion that you have recovered through the sale of it, and then I will tax you at that date. Okay, so this is what a recoupment is. Make sure you know the formula. Our exemptions is basically split into two categories. You've got your partial exemptions and your absolute exemptions. Now, the absolute exemptions is due to the nature of the entity. So that's generally linked to your government entities where you would have a full exemption. Whereas your partial exemptions is based on the income. Now, examples of that would be, for example, your interest exemption for natural persons, which is based on your age. If you're less than 65 years of age, it would be 23,800. If you're more than 65 years of age, it would be 34,500. And then your dividends would be completely exempt, except in the 4 instances where it's not exempt, which is generally your rates, and if you own more than 10% of the shares. And then the other thing that is generally not exempt or has a partial exemption is, for example, your foreign dividends. Only a component or a percentage of it is exempt, and you need to know those ratios. So for a company, it is 8/28, if I remember correctly, whereas for an individual, it's 25/45. Now, what I want you to do is please log on to VC Learn. Under your more resources, you will find I've loaded iTask 5. It is going to test some of the gross income concepts and the calculations. There is a password, taxation, that you need to type on there, and it's only open for this session. So I'm going to give you 15 minutes. So I'm going to give you till past to do this in class time, so that we can see if there's specific things. It's basic questions. It's not meant to be difficult. It's just to test if you understand the basic gross income context. Okay, so just let me know if you can't see it on VC Learn. Okay, so Estienne, the password is on the slide. It's taxation in all small letters.